Alrighty, traders, good afternoon, good morning, good evening, and welcome to the AAA session this beautiful Monday, except for all the technical issues that took us a little while to get started this afternoon. We should be good to go. We're going to be talking about currencies. We got trades of the week. We're going to be talking about both myself and Chris. We're going to be talking about stocks, and we're also going to be talking about cryptos. What is going on with cryptos? We've had some good rallies last week. Did we hit tops? Are there new opportunities, specifically on the altcoins? We're going to be talking about that right in today's session. So stick around, my friends. We're going to definitely have a good conversation around that and giving opportunities of exactly what we should be looking out for this week. Without further ado, let's jump in straight into that. I'm going to go ahead and introduce my my co-partner in this session today, and it's going to be I was going to say Tyson, and it's going to be Chris, because we don't have Tyson in the room today. Hey, Chris, how you doing, buddy?
Doing well, Gary. Should I call you something else too?
Don't call me Tyson. All right, so let's go ahead and talk about. I know we had a little late start here, but let's jump straight into stocks. Give us some insight on stocks. I know you're talking about a lot in travel that could be an opportunity, but you have other stocks you want to talk about as well. Give me some heads up.
Yes. So number one, we have about 25% of the S&P 500 reporting earnings this week. We've had another just crazy session of earnings the last 2-3 weeks. This week is all about travel stocks. One thing that's going to be really interesting. We have stocks like Marriott. We have stocks like Hyatt. We have stocks like Wynn Resorts, MGM Resorts. When I took a look at this, seeing that we have earnings on hotel stocks and travel stocks, it made me take another look at some stocks that I played in 2020. Royal Caribbean, ticker is RCL, Carnival Cruise Line, CCL, Delta, DAL. What we've seen, Gary, over the last month is we've seen some pretty heavy sell-offs in a lot of these travel stocks as COVID, Delta variant has started to creep up. I don't think that this is a bad thing as far as wanting to buy low. What I'm watching for are major support levels. So as an example, if I take a look at a stock like Delta, okay, I was highlighting some levels earlier. If Delta, you can just go ahead and write this down. If Delta comes back down to $35, I am going to start buying it and dollar cost averaging in from 35 all the way down to the COVID lows of 20. Now, the beautiful thing about just buying a stock at 25, look, I don't want to just buy a stock at $35. I want to buy the stock at $35 and look at selling calls. I want to look at doing some credit spreads. I want to look at doing everything I can to own that stock as cheap as possible, even if I have to work myself down in price over the next couple of months. So DAL is the ticker for Delta Airlines. If there's one airline I would consider owning and saying that, you know, financially it's doing well and better than others, Delta would be that stock. I also looked at United Airlines, which is United Airlines. The ticker is UAL. Very similar. If we pull back to around the same price, around $36 or $35 on United Airlines, I'm going to start looking to own and dollar cost average in down to the $20 low. So it's crazy. The same prices on DAL and UAL. And then let's take a look at Royal Caribbean. Okay, if I was going to pick a cruise line, Royal Caribbean is probably, to me, the better cruise line as far as financials. The more, profit-friendly cruise line that I think would be a little bit more, I would say resilient. I'm not going to say, COVID proof, but I think it's a little bit more resilient. So if we start to see gaps once again back down to $60, we're currently trading at 76. If Royal Caribbean dips down to $60, I know that Tyson and I will be talking about this in stocks and options and in our equities on demand trading room, because again, if we're owning these shares at great prices and we can lower our cost basis over the coming months, it's essentially a combination of dollar cost averaging, using options, and going after some discounted travel stocks. Because let's say, Gary, that, you know what, I know the COVID virus is going on, Delta variant's getting high. We'll see what the picture looks like in the next couple of months. But if people are still willing to travel, okay, if schools and businesses are going to look to be open, even if we're starting to see more of the mandate, right? We're starting to hear some rumors that, the federal government for the U.S. and other parts of the world are going to require either you get vaccinated to go back to the office, or you have to do like very strict like daily testing, which again, protocol wise, that's totally fine. If this is the new normal, this is crap that people had to mentally prepare for last year, right? If this is what the new normal looks like, then deal with it, right? So I'm just saying, if stocks are on sale, I'm looking at these travel stocks. And again, this week we'll find out what is the travel industry made of. Are we having decent earnings on hotel stocks, resort stocks? Are we going to have decent earnings on airlines? And if those prices come up at the levels I mentioned, if they're on sale, I like owning those stocks because there's a lot of upside potential. It may not be this year, Gary. It may not be this year. Let's say that stocks take a massive tumble. Let's say that travel stocks take a massive tumble. So what? Learn how to own stocks, lower your cost basis, and hold them for the next 1, 2, 3 years. Do we think that Delta Airlines can be back up to $100 and some a share? Probably. So if you own it at $35 and it gets up back to $100, that is a fantastic investment. So stock-wise, travels are big. We have 25% of the S&P reporting earnings this week. And again, it's August. It's the last month of summer. So we're going to see what the market's made of to keep on and cling to these gains, and if we can still hold these highs. I still think a correction is coming. I'd like to see a healthy 10 to 15% correction in the SPY and the Qs. And again, we're watching patiently. We're cautiously bullish. The trend is your friend, but it's not going to take much for that to break and give us a nice correction over the next couple of months.
Well, that's great. There's a lot of information. Hopefully, everyone is taking notes because we're just going to be throwing things out there. Make sure you go ahead and grab a piece of paper and pen, write it down. And while you're doing that, at the same time, go ahead and smash the like button as well. We want to get this video out to as many people as we can. And so the algorithm is important for the algorithm to work and get this video out by smashing that like button. If you haven't subscribed, go ahead and subscribe as well. Now, Chris, stocks is great opportunities for long-term investments. Let's talk about currencies right now. Currencies have become I believe that we've had some rallies over the last rallies and dips, depending, of course, which currency you've been trading. But I've been looking at the markets this morning. We did in our trading room, and we spotted a whole bunch of opportunities that are actually indicating that currencies are in corrective moves at the moment right now. We actually did a whole bunch of things that identified that were actually absolutely right. And the one thing that we use that is so important to identify correction moves is by using targets. Everyone knows that target trading is a corrective trading strategy, right? And so today, when we went and addressed all of the different currency pairs, we noticed that the currency pairs that we were looking at indicated that there was a missed target week, 2 weeks, 3 weeks back. There's a missed target that price hasn't got to, and so we're anticipating some sort of correction. Let's go ahead and take a look at a couple of examples, and I want your views on that. So I'm going to jump into the chart right here, and I'm going to go ahead and look at the currency strength dashboard on the right-hand side here. And I'm going to go to the first one here. We've got Aussie Swiss franc, and it says here, and this is important, everyone needs to understand what this means. Aussie Swiss says here that we should be selling Aussie Swiss. Now, if I go to the chart and I pull up Aussie Swiss right here, and you look at the Aussie Swiss, you'd be looking at this and saying, "Big dog, are you crazy? Are you losing it this weekend and coming in on the Monday and thinking that this is a sell?" Well, because we're flat down here, the market's dropped, we see beautiful divergence here. We should be really thinking about the market moving up, all right? Not moving down, but moving up. So when you look at the currency trend dashboard, and the currency trend dashboard says, "Hey, we should be selling Aussie Swiss to the downside right here," you think, okay, well, then I guess the dashboard must be broken. No, it's not. You see, what the dashboard is telling us that the momentum over the last couple of weeks has been bearish, and so we should continue to see it. But we've got to look at the details, right? The devil's in the details, and we've got to look at the details of what this is really telling us. And if you go to the chart and you look at and you break down certain patterns that are appearing, I like to use leading indicators that are telling us that we're getting to a turning point in the market. One thing is divergence. Divergence helps us to identify turning points. But also what helps as well is if we have missed targets that are above the market that has not been reached yet, we can also identify a target where price can go to. So we've got divergence, and then we've got price that the market can go and retest because of missed targets, pivot points that haven't been touched as of yet. And so there's two things we can use, but then also at the same time, we can then go ahead and use other entry point strategies to actually trade it. Check this out. Here's the Aussie Swiss right here. So we got this divergence right here. Clearly a downside move is not in play, and that the market is looking for this correction. How do I confirm that? How do I confirm the market is looking for correction? Well, I'll go into my hourly chart right here and take a look right here. Take a look at we've had a missed target up here that price has not got to. And then we have another missed target right here, just slightly above here, that price has not got to as well. So now we can say that without a shadow of doubt here, that we're definitely looking for price to go back and retest these levels. So we're looking for this correction move. And so when I look at the currency strength dashboard and I see that price has moved to certain levels, it's really great. But then I know that the market's hit resistance. I've got divergence on the daily time frame. All of that indicates that there's going to be a change in the momentum, change in the trend of the actual market right now. Not to say that we're changing trend in the sense of we're now going in from a downtrend now to an uptrend, but more saying that we're in this downtrend, but we're now looking at a correction move in the downtrend. So which means that there's larger swings in play at the moment right now, which is really cool. So I guess the question here is, how would I trade this? How would I actually trade this thing? So I spoke about an entry strategy. If you go down to the lower time frame right here, and I'm going to look at this strategy I like to tune in on. Some like to go ahead and look at Right Trader Max. I know Chris and I are very, very excited about Right Trader Max and what that can offer. But we do know that we have to move down to lower time frame to pick up this opportunity, especially in early stages. So there's one strategy right here. It's called the FX Market Fusion. And I will be looking right here for buying opportunity. We spoke about this morning. We said, hey guys, if the market goes ahead and pulls back, here's the opportunity. I said, this is the buy zone when price comes back to retest that previous high. All right. So here was that buy opportunity. Now, if you go to Right Trader Max and you scale that down to a 15-minute time frame, you may even have to go to a 5-minute. You can see that we haven't had a change over on the 15 yet. The price is still bearish for us at the moment. Go down to something a little low. If you really want to get the turning point of that move where divergence is confirming it, look over here. We've really gone ahead and confirmed the bullish. Now, I spoke about that buy opportunity as price pulled back. Here you can see right here. Price went ahead and created this, what we call a nice wave 1. Then it goes ahead and creates that wave 3 here at the top. It comes back, it pulls back, retests the previous highs right here, but also comes back to test the 5-minute. You didn't think that lower time frames exist? Take a look right here. Here on the 5-minute time frame, we had price moving back all the way here to it's called a 200 EMA, bounces off that and confirms now we're back in the bull run. So we're back in the bull run, and we're probably going to chase after around about 66.87 for those that want to look for the short-term trading opportunities. So the deal here is, and I can go as another example. If I go to like Euro Aussie dollar and open up Euro Aussie dollar here, let's go Euro Aussie dollar, right? And we go to the daily time frame on this, right? We're looking at this right here. We're saying, hey, we were looking for price to chase after this high here at 159.44. Now price has gone ahead and taken out that high. We went up a little higher, and now guess what? We have divergence. Once again, check this out. Look how price and momentum are disagreeing right here. So we have divergence right now. And so I'm going to talk about this a little later, but I'm going to pass it on to Chris first. But I'm going to talk about why I believe the Euro Aussie dollar is the trade of the week. And I'm going to go into those details in just a minute. But I'm going to pass it over to Chris because I know Chris has got something that he's looking at based on some currencies as well. Go for it, Chris.
Yeah, Gary, the trades that I'm liking, this actually was a bit of a carryover from the trading battle that Tad, Tian, and myself did last week. I have a bit of, I suppose it's a bit of a hedge because I think either way I'm going to be right and I'm going to be making profit on these trades. And so when I say hedge, these are inversely correlated currency pairs, Euro dollar and dollar Swiss. So for example, if the Euro dollar goes up, generally the dollar Swiss goes down. Okay. So what I'm actually doing this week, Gary, and what I started doing last week and I'm going to stay with is I'm long Euro dollar and I'm also long dollar Swiss. Now, I just said they're inversely correlated. So if Euro dollar does go up, that's good for that position, but that means my dollar Swiss is probably going to drop. So what I'm going to do is treat them like a position trade. I will be willing to hold the positions to work through them. And it's funny how you spend all the time talking about targets because, Gary, we have some levels that I want traders to know. For example, there are 2 levels I want you to write down for euro dollar. I want you to write down the price 1.1985. 1.1985. And I want you to also write down 1.2080. So basically, I'm looking for about 100 pip window for the euro dollar long to hit. Okay. Now on the euro dollar right now, as we roll into a fresh month of trading, we have a monthly target at 1840, 1.1840. And so, Gary, I know right now when you're looking at targets on the charts, I know that we typically look to see, where is the trend going, right? Or if it's a range bound trade like the euro dollar has been, where are the targets that the price can stay inside of? And we could come off of the August pivot. We could come off the August target and bounce, offer support, and then go up to the July target that was missed from last month. And so I'm looking for euro dollar to stay bid and continue to head up towards 1.1980. Anything that is above 1.20, I'm very happy with taking profit. So traders probably saw me do this last week in the Flex Room. I have 5 entries that I'm stacking up with buy stop levels. And I'm long right now at 1870 all the way up to 1950. I'm stacking orders in, spacing them out by about 15 to 20 pips. And my goal is to protect all my profits at 1.20. I'm also long on the dollar Swiss. And the dollar Swiss has been dropping. But you know what? We've been dropping back to these pre or post FOMC breakout levels from back in middle of June. So in the middle of June, we are basically coming back to fill some of those levels. If we end up finding support, let's say at 90.50 or 9,000 on the dollar Swiss, I still like buying small orders and taking it back up to, write this down, 91.20 is a short-term target to the upside. So I'm long dollar Swiss targeting 91.20. And I'm also trying to break the highs at 92.70, which gets me back into some pockets and targets above 9,300. So if you're more of a short-term trader, I like long dollar Swiss targeting 91.15. If you're more of a, let's say you're going to be in the trade for about a month. Okay, a month in the dollar Swiss, I would look to take profits above 92.70 all the way up to 93.50. So I'm long on both of those. Look, like I said, if I give them both a month, okay, if I give them both a month, one of them is going to be profitable. Either the euro dollar is going to be hitting 1.20 and I close out those positions and my dollar Swiss I level back into, or my dollar Swiss hits those positions and I level into euro dollar. Either way, I like the trades. They're fairly slow movers. They're low volatility, and I like them. I think it's a pretty solid play here for the next couple of weeks, and that's a position I'm really interested in for holding through August. And again, obviously I place trades I want to get paid today, but it's probably something I'll have to wait a couple of weeks on. But I think it's a good way to look at some directions, highlight some of those levels, set some chart alarms, and come back and join us next week in AAA because if those levels get hit, we're going to talk about some profits that we're making.
Excellent. Perfect. Chris, I like it, man. I like it a lot. So let's jump into my favorite trade of the week, the Euro Aussie dollar. And let's talk about those details right here. So Euro Aussie dollar, I'm going to go ahead and flip over to the chart so you can see exactly what I'm doing as I go through this process, right? So we spoke about, there we go. We spoke about the divergence. We spoke about pivot points. We spoke about all this good stuff. But how do we put all of this together? Well, here's the first thing right here. You can see price and momentum are disagreeing. And so we're seeing that we're probably going to be heading back down south. Now, I like to always have targets, not just for the short term, but for the long term too. So I know that if I want to continue to trade this and live off this trade, how do I keep reinvesting into this and add to the position? And where do I take profits? Because think about a trip from, let's say, Florida to New York, right? You're not going to make a trip, at least I don't, make that trip in one day. I certainly want to go ahead and stop at certain places, take some rest, get a break, get something to eat, and then travel the next day. And so what we look at is we always look at these long-term targets as a trip from Florida to New York. You can call it whatever you want, but you want to go ahead and stop off and refresh, charge the batteries, whatever it is. But you want to go ahead and do that. So what's going to happen is when we see these short-term moves that hit our short-term target, we go ahead and take our profit, wait for pullback, we get back in again, but we're always going to be looking and targeting for that long-term target. And so the Euro Aussie has given us exactly that. It's given us this big vision of where the market's going to go to, but then how we can go ahead and take profits on the way and where we should be taking profits on the way, so we don't get caught up in this emotional ride where we're in the money and now the market pulls back and all we're thinking about is, man, I should have taken my profit, right? That's constantly the thing. So if we look over here and I go into the charts again, you'll see here, this is the starting point. This is Florida. All right, maybe this is upside down. Maybe this is New York and we go to Florida because we're heading south. So this is okay. So this is New York, right? And so we're heading out of New York. Things aren't great. There's lockdown. I'm just kidding. Just throwing something there. So we're looking to move down to Florida. So what we want to do here is we want to go ahead and start looking at options. So what is the options that we want to look at? Well, the first thing I want to go ahead and do is I want to get inside this trade. So if I go to my 15-minute time frame, and I look at my 15-minute time frame, and I'm looking at all signals that are bearish. Now, here's a whole bunch of signals up here that at the start of, or let's say the end of last week, that gave us opportunity to get in. We had an opportunity to get in right here on Sunday, right here, maybe even a little higher. So even though there were signals on Friday, if you chose to get in after the weekend, you would have definitely got in right about here. So that's getting in right away at the start of the week. Throwing something in now, just like Chris likes to do, start building up his positions. Now, the next trade would be waiting for the next trade signal. So which means we have to get a correction in order to be able to trade this. So we'll be waiting for that correction for those that have not entered on the Euro Aussie and are looking to enter on the Euro Aussie. You'd have to then wait for the next signal. Whatever trading strategy you use, wait for the next trading opportunity. Now, how do we can confirm targets? Well, here it is here. Just like we spoke about it with the other currency pairs, you can see the same thing right here. Look at a weekly target right here. Price is all the way down here at around about 155, call it 60. All right, price is we're looking for a nice little move down here. How far is that? Well, traders, this trip is going to be a 552-mile trip, if you want to call it that, New York to Florida. If you have to convert it, we're looking at pips, right? 552 pip opportunity. So we're looking at a 552 pip opportunity. Now, why is this important? It's important to know exactly what you're looking to gain on this so that you can decide on whether or not this is going to be a long-term trade, a short-term trade, because knowing how much profit you can generate from this trade, you can now start adjusting your risk to it, right? Knowing that, okay, I'm chasing off the 500. If I place a 100 pip stop, I'm going to make 5 to 1 on a long-term trade. If I want to go for something shorter, I'll go down to a lower time frame. I tighten up the stops. I make the same risk-reward ratios, 1 to 3, 1 to 2, and you're gaining pips based on the risk that you're risking so that your ratios are good. So you have to know what you're gaining and what you're looking for. But this right here on this chart, it confirms that our long-term target is down here, 552 pips. Now, if I go to the daily time frame, that I would say is your midterm target. The long-term target is based on this. We're still waiting for price to drop down here to the 127 based on this big swing on the daily. So we can look at this and say, hey, if we start breaking through these levels, we're not just going down to Tampa or to Miami. We're heading down to the Keys. So we're going to be breaking through this trend line. Once we break through the trend line, there is bigger opportunity for us all the way down here that's going to give us about, let's take a look at the range. We're looking at around about, call it 1,200 pips, between 1,100 to 1,200 pip opportunity. So we're looking at a much further downside target. And so what this creates is opportunities for those traders that say, man, big dog, I just don't really know what to go ahead and get into and what to trade. Well, this could be a trade that could take us anywhere between 3 weeks to 6 weeks and creating opportunity. All you want to do is focus in on sell, sell, sell. If you want to stick with the trend, sell, sell, sell. So Euro Aussie dollar for the next 3 to 6 weeks may possibly be just sell opportunities. Now, I'm not talking about those scalpers that want to go and scalp against the trend and that. I'm talking about for those traders that are going to try and get in, make some good money, put some money towards some pairs that they want to trade, and just trade those bearish moves to the downside. I absolutely love that pair. And I'm going to be posting some stuff on my YouTube channel about this and how we're going to enter, what we're going to do, and go through this process over the next 3 to 6 weeks. So I'm going to fall on my back just now. All right, so that's exactly what it is right here. I've got things loaded here on the back of me here that I've got to be careful about. So that's the trade on the Euro Aussie dollar. Real excited about that. Chris, what do you think about that trade, by the way?
I really like that trade, Gary, because we have been long since the lows at 5,300. And I was essentially saying, look, once we hit 1.60, I'm now looking for confirmation to start to sell it because I'm right there with you. I think once we have the structure, the trend line breaks, what I'm liking is, at current levels, I don't mind testing. I mean, we just talked about it. Like, I don't mind testing levels right now. We're looking for confirmation to be short. I would be willing to be short, literally, Gary, from 6,100 all the way to 6,600 and look for opportunities to sell. I think that'd be a candidate. Most likely, I'll talk to traders this week in my Flex room using Price Action Pro. We can use that window from 6,100 to 6,600, start looking for confirmation and selling. And I like targeting those 5,300 lows. We should go lower than that, like you said, the 127 swing. But I would like to see if we start entering in now and we have 700 pips to the downside, 800 pips to the downside, nobody's going to complain about being right and directionally. So I think the trade is great. I think it's, coming back to past resistance. I would really like to see it, like you said earlier in the session, a lot of these moves we're noticing in the markets are on corrections. What's interesting, and a lot of them, they're wave 4 corrections. And wave 4 turning into a wave 5, it may not be as obvious. Like the trends might not feel as obvious. But wave 5s are also really powerful trends. They might take a little bit longer. They might move a little bit slower, but they're still trends, and they're really nice to trade. So that is one right there that I think lines up beautifully for a big trade opportunity.
Great. Now, before you leave today, we're going to give you one trade you can make 20 pips out of. I call it my pip grabber. You're going to get to make 20 pips out. I'm going to give you the trade opportunity in the session at the end of the session. Stick around, but let's move on to cryptos right now, Chris. Cryptos, what is your big mover right now that you're really focused on right now? I know I've got money in Ethereum, loving Ethereum right now, but I do know, and we said that there's possible opportunities on these altcoins. I know that the altcoins have not moved yet. I actually spoke to my son on Friday, called him up. He was on his way for dinner, and I said, Cameron, buy, and I gave him a bunch of cryptos to altcoins to buy in on. And he says, but Dad, what must I do? I said, triple up, my friend, triple up. Now, this doesn't sound like a gambling call, but I said triple up on these positions because whatever you were in, we're at a bottom. And because of Bitcoin's rally, because of Ethereum's rally, the altcoins have not taken off yet. I know Litecoin's followed very quickly, but the other ones, Chainlink, Loopring, Luna, what is the other? Polk has moved nicely. That's been moving. Dot's moved nicely as well. But there's a couple of things that have not moved that we need to pay attention to. So we can go ahead and take a look and see what those are. What cryptos are you got your eye on right now, Chris?
Well, first and foremost, I want to say that if you've been paying attention to these sessions or following us in our trading rooms, Bitcoin's been a great play from $30,000 support all the way up to a June target. We were looking at, and I was looking at short-term levels, Gary, as I essentially said, I like taking kind of half my profit on Bitcoin from buying it at 30K, which I did, and taking profit at 42, it was over $42,000. So the buy level is 30,000. The June target that I was interested in was just above 42,000, and I took profit over this weekend on Bitcoin. Now that was about a 40+% move. We moved, in fact, right around 40%, and that was a nice little ROI for literally being in the trade, Gary, for about a month and a half. 40+%.
Perfect.
Not a lot of things offer that. Another one that follows Bitcoin is GBTC. It is an ETF that moves and correlates with Bitcoin. I had two separate trades in this one. I was long at 27, out at 33. I was long at 24, out at 35. And that was a 30+% gain on one and 40+% on the other trade. So just in two transactions on GBTC, turned over 70% profit. Very happy overall. I am taking partial profits on these cryptos because I'm still going to let Litecoin run. I'm still going to let Ethereum run, but I'm watching a lot of these June targets. So as Gary mentioned earlier, target trading, watch these June target levels. And what I'm considering, Gary, is I don't know if we're going to see new highs on cryptos or if we're going to continue to build this base and see ups and downs and ebbs and flows. I do know that as we revisit support levels, if we do, I'm going to continue to look to buy lows. And if we go lower and lower and divergence sets in, oversold conditions set in, I'm going to buy more cryptos. But right now I'm playing with profits. I'm playing with house money. I will take profits on Litecoin. Actually, the altcoins like Ripple and Stellar Lumens and Link. And I'm in Mana, which is Decentraland, and Algo. All these altcoins that I'm in, if they see a decent amount of profit, I'm going to concentrate those profits back into Litecoin, back into Ethereum, back into Bitcoin. So I am condensing, and I know this is probably opposite of what you're doing. I'm condensing my portfolio and my crypto exposure to more of the take my profits, protect my profits, and then concentrate on the kind of the majors, if you will. But I know what you're doing. I know that you are kind of spreading out with what has been lagging, or if Bitcoin's doing well, you're seeing a lag in the altcoins. And so right now you're probably setting yourself up for a nice little wave of profits, because as Bitcoin has had these highs, let's say Bitcoin takes a little breather. Well, altcoins will probably start to gain and make up that same type of traction. So Gary, I wouldn't be surprised in the next 1 to 4 weeks if you're showing a really nice chunk of profit on these altcoins that you've been putting little bits of dollars here and there in, and just staying very steady. So I like cryptos. Like I said, I just don't know if we're going to see the new highs of 2021, or if we're going to come back down and just revisit lows we just had from last month. I don't know yet. But it's going to be an interesting thing to monitor. I mean, watch the crypto prices, set your chart alarms at recent highs and lows, and we will continue to dissect. But as we hit support levels, I'm looking to buy. If we end up breaking major structure, I'm looking to buy. But for right now, I want to be protecting, taking profits, and I'm going to start concentrating that portfolio into the majors and going more into like the holding. I'm going to hold those cryptos for the long-term gains, and then capitalize in the short term with those June pivots.
Yep, I like that play. I like that play a lot. Yes, I'm being a little bit more extravagant when it comes to this, to investing in cryptos, just because of the fact that back in 2000 and 2001, I was trading, and we were actually trading on bad pricing with brokers. If some of you don't know what that means, what we're doing is, and back in the day, it was very early, even brokers didn't know exactly how to be able to operate properly, because what was happening is there was brokers that were leading other brokers, which means that they were feeding off their price feed, and so there was a latency in their price feed. And so when there was a latency, we started realizing that some of the brokers were leading. And so we'd follow that broker, we'd fund one of our accounts with the broker that was lagging. We'll be watching the broker that's leading, and during fundamental announcements, non-farm payroll, when it was still good, when we had some good moves, and there was no slippage rule there, they hold your price at the price you want. What happened was, when we see a broker, the leading broker, take off in a direction, we would go ahead and start placing trades on the lagging broker, and we would make an absolute killing. Now, this has actually brought back great memories, what I'm seeing right now on altcoins. Altcoins have been doing this. They've been lagging behind the big boys. And so because they're lagging behind, it's creating this opportunity. I've seen it more often than not. And so this is why I'm taking advantage. It may plan out that it's going to work a couple of times, or maybe a few times, but then stop working. It is what it is. I'm going to take advantage while it's working. We did that back in 2000 and 2001. It's going to work now in cryptos. All right, so last thing here, Chris, is I said I was going to give a trade opportunity for everyone to make at least 20 pips on a trade in today's session. I'm going to end off the session with this. Let's take a look at the currencies right now and go to the Canadian Swiss. All right, go to the Canadian Swiss, and let me go ahead and see if I can put that back in again. Canadian Swiss. All right, there we go. All right, Canadian Swiss. If we look at the daily time frame right here, we see it trying to break through this support level right here. I'm going to go to the. I'm going to go. Hang on, let me go back here. But all right, so we're trying to break through the support level right here. I'm going to go to this right here, and I'm going to trade it back. Now, take a look right here. I'm expecting price to come back to retest this support right here. All right, this support that is just recently broken out of. We spoke about in my trading room. We said, hey, waiting to see if this market holds up at the support. Because why? Because we said that the Canadian Swiss is going to be bearish. So the Canadian Swiss, based on the current strength dashboard, has broken through that support. We're going to come back up and retest it. take a look right here. We've got about 15 pips to go before we retest that. So maybe 15 pips is going to be it. What I'm going to probably say to you is if we get into 15 pip profit, go ahead and lock in. But I'm going to enter on this trade right now. This is it right here. I'm going to enter, and you don't have to follow. You don't have to do anything. But I'm going to go ahead and enter on this trade. And it's going to be chasing after 20 pips. Now, just so that you know, all right, just so that everyone knows, everything I'm doing right now, I have in actual live trading accounts. All right, so this is not just showing you and setting up. These are trades that I actually do have myself in my own trading account. All right, so here we go. Buying at the actual level, the current level we're at right now, chasing after a net profit of 20 pips. I am going to use a cost averaging strategy, which means I'm going to be cost averaging in. And if the market goes down 25 pips, I'm going to get back in on this trade. If it goes down another 25 pips, I'm going to go in. But I'm going to look for a 20 pip grab. I'm looking for only 20 pips. And for those that follow my trading room and follow me on my Telegram account, you will see these are the trades I post constantly. And we are always in the money on those. So there it is there. It's in. We're in at the actual market price right now. We're chasing after 20 pips on this trade. If it goes into 15, I won't frown upon people that move their stops up if they're 15 pips in the profit, because we do have resistance up here. But there is that possibility of a little spike above that to give you that extra 5 pips. But check it out. This is where we're at right now. If it goes further down south, I'm actually not going to be too unhappy, because if it goes further down south, all we're really going to be doing right here is we're going to allow the market to drop. We're going to get back in again over here, and when it comes back up again to retest that first entry, that's when we're going to go ahead and capture our 20 pip net profit right here. Okay? All right. Now, I will go ahead and post information on this, give you an update through my Telegram account. For those that do follow me on Telegram, I will update you on that and let everyone know exactly where I'm at on this position right here. We'll also update that in the next session here in the AAA section as well. All right, Chris, with that being said, your final words, my friend.
Final words. We're going to keep an eye on travel stocks this week. We have a massive amount of earnings in the S&P 500. Are we going to see the market cling to these highs? The stock market still remains we're witnessing a melt up still. Path of least resistance remains bullish. The Fed doesn't want to disrupt anything. So again, we might enjoy the times right now that we can, but do expect a correction coming soon. A swift correction, somewhere to the tune of 10 to 12%. Maybe it gets more severe, but that's what I'm looking for from a technical side. We'll talk about it. In the Forex side, we have some great Forex trades. Gary, the Euro Aussie, I think is awesome. I like my plays on Euro Dollar, Dollar Swiss, CAD Swiss as well. I mean, there are so many good trades right now. If anybody is well versed, and I know you can follow Gary in his trading room. If you're well versed in Elliott wave, if you're well versed in a corrective wave versus an expansion wave, we're sitting at these really critical spots where, you know what, when we start to see some transitions and trends kicked back up, a fifth wave is going to be happening probably in the next couple of months, and some amazing trend opportunities as we get out of summer trading. That being said, we're looking for, if you've been watching ranges, expect that to change. If you've been watching trends, expect tops and bottoms to kick in. So one thing I want traders to get ready for the month of August is a very important transition month. We usually see tops and bottoms on trends, or we see breakouts after the price has been sideways. So that means that the dynamic of the market, right? The trend cycle changes, the range cycle changes, and that means that we need to get ready for things to shift gears into something else. So if you're trading range-bound systems, look for trends. Look for trend-bound systems. Have an open mind when it comes to changing price action in the next couple of weeks. So that's my final word for today.
Fantastic. Well, great to listen, guys. Remember, if you haven't already smashed the like button, do it right now. If you want to see profits this week, just kidding, but smash the like button for this video. Also, very importantly, remember we've got fundamental news coming out this week, and Chris and I haven't even spoken about the news because you know what? It doesn't really change our technical view. We're going to see how the news takes place this evening, or actually early morning on Tuesday when the rate decision comes out for the Aussies. We'll see how they're probably going to keep the rates unchanged at 0.1%. The same for the UK. They've got the rate decision coming out on Thursday. Also probably keeping the rates at 0.1% as well. No change to the rate is expected. We'll see how that affects the market. We'll talk about that in the next AAA session. In fact, we'll go ahead and take a look at the trades that we looked at today. Do a little recap on that next week. So join us next week, same time, same place. We'll have Tyson with us next week. You guys have a great week of trading. Check out the opportunities we spoke about, and we'll talk about it next week. That being said, Chris, thank you very much. Appreciate you being here, buddy. And we'll see everyone next week. Thank you.
Bye.